Ladies and gentlemen, as I thought that the excitement in the stock market is waning off, two analysts, world-class analysts, came out and basically say that the stock market could tank by as much as 20 to 35% for this year. So I thought it's important for me to share with you this insight by these two world-class experts. Let's watch on, shall we? So two analysts, Tom Lee and Ed Yardeni, two Wall Street strategists, warned that there will be serious downside this year. And I thought that was quite surprising given the recent development in terms of a market rebound from the bottom. And I thought it's good that I will share with you their views. So there are currently three forces that are shaping global markets right now. Number one, clearly the Middle East war. I don't think it's going to come to an end pretty soon, at least not in days or a week or so. And clearly the oil supply disruption is still going on. And right now there is volatility. It doesn't mean it's going down, but it's certainly going up and down in a massive way. So amidst all this noise, fog of war, irritation, fake news, positive news, lies, truth, half-truths, two very interesting Wall Street bulls. These are very positive, very optimistic analysts. Tom Lee from Fundstrat and Ed from Yardeni Research have issued their latest prediction. And I thought it's interesting that I can show you what did they say. So, but to give everybody a context, what's happening for today, the shipping attacks are still happening near the Straits of Hormuz. Now we have got multiple ships being reported as being attacked, and crew evacuation has been reported. And these are around the Strait of Hormuz. And this is clearly no sign of stopping in terms of safety being compromised for ships that are willing to sail through. So the Straits of Hormuz remains still a choke point. Now, the Strait of Hormuz generally refers to the choke point, but it could also be before and after as well. So clearly, this straits is right now the world's most vital shipping corridor and is now being attacked in pieces of news here and there. Of course, frightened the hell out of all the shipping companies. Now, interestingly, I thought that the US will gung-ho-ly come out and just say, we will escort all the commercial ships. US Navy just came out and say, we will not escort you guys, sorry guys, because the risk of an attack for the naval escorts is too high. That right now we know that there are hundreds of vessels waiting to go, but we cannot escort you because we'll become sitting duck. So it's quite surprising. Pakistan, I think France, I think they're all looking into escorting convoys, but not the US, because the US will come as a sitting duck. So oil prices, initially gone down, gone up, gone down, gone up. It just have a lot of volatility. Right now it's trading at about $85. Definitely down quite a lot from the high of $100 over dollars. That's largely because one man just basically say, oh, the war is coming to an end faster than expected. So a lot of people are very optimistic. I hope that what he says is correct, because war are never good for people. And I think, there is a chance that he might be right because he's in control of the attacking forces. But meanwhile, on the Iranian side, no, you tang kuku, right? You fight, I fight, I'll fight you to the end. You want unconditional surrender, you tang kuku. But nowadays, to be frank, most of us don't take Donald Trump words seriously in terms of his expectation, because he flips quite a lot. Now, let's talk about the prediction itself. Tom Lee, I think, is not unfamiliar person. I talk about him quite a lot. He's a co-founder of Fundstrat and the former chief strategist of JP Morgan. And right now, he's predicting that S&P 500 for March, will turn into a bull run. By the way, he has been wrong before. Okay, I know. But I'm just reporting what he says because he has been right quite a lot of times. Sometimes he's delayed. Quite a lot of times he's right. So he thinks that by March, it will turn into a bull run by the end of the month to 7,300 points. I'm not too sure about that. Okay, I'm not too sure about that, but that's what he says For us right now, we look at it like maybe he's wrong, but he has been right more than I have been right. So it basically says that AI productivity is still going strong, and it's true. And there are strong corporate earnings and capital inflows are flowing to US equities right now. However, he says that it is very likely that later in 2026 this year, there will be a downward swing of the stock market, at least 15 to 20 points correction that we should be experiencing. And that's why he thinks that we ought to prepare ourselves for it. Basically, there will be a scenario where liquidity suddenly tighten and risk appetite just fade away from the surface. Now, he did say that higher oil prices, while it's very bad for Asia and some other country, it's not necessarily bad for US because US is now a net exporter of oil. So the higher prices actually is in favor for US for oil prices. So he thinks that because of this, US is actually a net beneficiary of higher oil prices. That is true from the oil perspective, but to the rest of the world, once every manufacturing hubs have a higher cost of production, the higher cost will still come back to US, and higher prices is never good for US and never good for the stock market as well. I want to talk about this Ed Yardeni. I hardly talk about him, but I track him quite a lot. One of the main things that he's not so exciting in oratorical skills. He's widely respected, and he's a permanent bull, and he has been very accurate in making cycle calls and things like that. So I do listen to him quite a lot. And right now, he's actually saying that there is a high probability of a sharp correction, maybe even up to 35% downdraft. That's a crash, 35% crashes are not common. Okay, not common in stock market, especially at the index level. So I think that that's quite concerning, and he thinks that this will happen this year. At the very least, he did say 10 to 15% is like highly possible. 35% is like maybe even 35%. So at least it's a number between 10 to 35%, but it's definitely a crash of a certain magnitude. His current situation, his assessment of the current situation in the Middle East is basically, I know a lot of people are very optimistic right now. He says, until I see tankers move safely through the Straits of Hormuz, the fog of war remains right now. So, he thinks that right now it is one thing for Trump to say that, victory is now here, the war is coming to an end. Then he then say that, hey, this country, Iran, has been at war with the United States for 47 years. Okay, they are not strangers to war or conflict. So to think that they will just, surrender and open their doors to welcome you to take over the country, you wait long, long. Now, interestingly, he, like Tom Lee, also thinks that after the crash, there will be a massive upswing up to 7,700 points for the S&P 500. And he believes by 2020, S&P 500 could hit as high as 10,000 points. And of course, he's not just optimistic about the stock market, he's also optimistic about gold. Gold, he thinks, will go as high as $6,000 by end of this year. Now it's about 5,200 or so. And he thinks that by 2030, you hit $10,000 per ounce. So I don't know much about gold, and I think that gold is somewhat a asset of insurance and instability generally. But it's interesting to hear him say that gold has a very powerful upside to come. Now, interestingly, if you were to step back and take a look at them, I don't even think they know each other well. They independently basically came out with the same statement. Yes, okay, we know that market right now, is in instability, but along 2026, for different reason, the market will crash. Okay. Now they differ on the extent of the crash, but the market will crash. And then you recover very quickly. Probably then is what we call a V-shaped recovery. and to a powerful recovery to the end of the year. So I thought that as a contrarian investor like me, in short, a crash time buyer or crash buyer, this kind of news is music to me. I like to buy during crashes, okay? And I've been successful at it 6 times since 2007. And I will take this cue very seriously and get myself prepared. I've been prepared, but there's one thing to prepare the bullets on the side. Second thing is to load it into the magazine and arm it. And some point of time, I've got to cock the weapon and ready to fire, right? So I'm preparing, escalating the steps in the process right now. So I think this is time that I will monitor quite closely. Now, let me just say again, I know a lot of people are very impatient about the market, waiting for it to close with a crash. We don't need to predict. We don't get emotional. Emotion is a very dangerous enemy of the stock market. Impatience is also an emotion. Any form of emotions, okay, are dangerous to investors. So let me repeat again. We don't need to predict. Okay, we only need to prepare and get ready. So when the time comes appropriately, we just respond. So it is important that we just expect volatility that go up and down, up and down, and down. If it goes up, fine. If it goes down, fine. But it go massively down, we go for the kill, right? So now let's see whether the two analysts are correct. We've got 2 months that have passed, there are 10 more months to go. And if what they say is correct, we should see this probably in 4 to 6 months. So let's see. Okay, let me know your views in the comments. And I think these are excitement times. Great fortunes are made in times of crisis. Okay, so do you want to be one of them? Right? So follow me closely, hit subscribe, and give me a like if you can. And I'll see you in my live stream tonight. Bye bye.